Hello and welcome to the weekly ADM Agriculture YouTube market update. My name is Freddie Humfrey and I'm grain trading manager here at ADM Agriculture. I'm back in the hot seat today, albeit looking out of the window, it's anything but hot. Most definitely is a long old stretch from this time last year when nearly 50% of the UK wheat harvest had taken place. We'll touch on that in a little bit later on in the video. We're going to kick off with main movers and shakers in the market, touch on technical analysis on the London Nov-23 daily wheat contract, and a thought on wheat harvest here domestically and in the northern EU part of the world. This market, as is the way these days, has been exemplified by increased price action volatility over recent weeks following the collapse of the Black Sea Grain Corridor initiative after Russia pulled out in the middle of last month. Increased military action by Russia against Ukraine, record temperatures in southern Europe, high temperatures in the US Corn Belt, and a very damp northern EU and UK start to harvest have all added to the chop in prices. While the market had been expecting the Black Sea Grain Corridor to end on the last agreement on 18th of July, the manner in which Russia followed up the closure of the grain corridor by hitting grain export facilities on the Ukrainian Danube River really struck the market and pushed a risk-on approach to prices 19th through 22nd of July. Markets then proceeded to give these gains all but completely back to the start of this week, with current markets trying to appreciate again today following attacks last night on the Ukrainian port town of Izmail. This is an ongoing situation, as is the US Corn Belt story. We see corn crop conditions in the US down 2% week on week to 55% good to excellent. We also see key Corn Belt states reducing adequate to surplus soil moisture ratings, which is not conducive to arresting this slide in corn crop ratings, so one to continue to watch closely. Closer to home, northern EU and UK harvest has been blighted by the jet stream moving south and east, bringing consistent precipitation events and cooler than normal temperatures, just as farmers try to harvest winter wheat. We've seen premiums for northern EU high protein wheats jump in the last 2 weeks as a result on the back of these concerns that weather is really hampering the quality of crop. It is important to note, though, that today this is an expectation of issues, as until the crop is actually in the shed, it is hard to say what the exact quality trends are until that point. So let's just keep an eye on that one. Finally, we look at the London Nov-23 daily wheat chart from a technical perspective. Hopefully you can see that on your screen. We've really been buffeted by this wide, slow upward channel that you can see on the screen, highlighted by the green lines designating the outer limits of the channel. It has been consistent over the last few weeks, and we enter into the bottom end test yesterday and today, which should give the market some short-term technical support from this point. One point I would hasten to add, if this recent uptrend channel is broken to the downside, then it is worth remembering that we've been in an 8-month downtrend until recently, and the market is struggling to really release those shackles at this point. So just one to watch at the lower end of this channel. Stochastics are entering into oversold, and while stacked negatively, a breakout of oversold with the support on this channel trend has the potential for some short-term upside. So we have overhead resistance revolves around 203 and 217, while we see that trend channel support currently, and then again at 190 and 180 as the key support levels from a technical perspective. Hopefully that's useful. Please do get in touch with comments, feedback, and otherwise we hope you have a fantastic rest of your week. Thank you very much.